And oil prices climbed 6% on Friday to $31 per barrel, even as oil-producing nations differed on whether to cut production. Now, leaders and stakeholders in the oil sector attending the World Economic Forum in the Swiss resort town of Davos resumed their debate around production cuts at the meeting. Nigeria's oil minister said the Organization of Petroleum Exporting Countries needs to meet soon over the matter, while Saudi Arabia reiterated it won't reverse course unless non-OPEC nations play their part in production cuts. Now, officials from two non-OPEC nations speaking on the same panel, that's Azerbaijan and Russia, were, however, pessimistic a decision could be reached soon. Now, this as Venezuela begs for a crisis meeting. Now, the current rally in oil prices was also bolstered by hopes of a fresh stimulus by major central banks, cold weather on both sides of the Atlantic, and of course, oil installation attacks in Libya. Now, joining us to give some insight on some of the big issues dominating the debate at Davos is Jack Barton. Now, Jack, welcome back to the show. Low crude oil prices, one of the hot topics at Davos. And of course, yesterday we saw oil executives and representatives of energy-rich nations meeting in a closed session to discuss the issues in the sector. Now, what are the insights into the discussion that took place?
We've seen closed sessions here, but we've also seen some very public debate as well, including Iran's foreign minister saying that Iran fully intends to get its full share of the market back, putting an extra 500 million barrels a day into that already oversupplied market. Many countries suffering under the low oil prices. Venezuela, of course, has declared a state of economic emergency, has called for an OPEC emergency meeting. Nigeria had earlier called for a similar meeting, but what we're hearing from those sessions is it's very unlikely. There may be a meeting in March, but even that is not expected to happen. It's more likely that that would happen in June. What the allegation is against OPEC is that it is oversupplying the market to try and push out competitors, particularly the United States, where there's really been a fracking boom. The US now supplying its own oil, not dependent on the Middle East anymore. But OPEC, particularly Saudi Arabia, the biggest provider there, arguing that right now they only account for a third of oil production. So what they do doesn't have such a huge impact as it would perhaps 2 decades ago, when it would have had a very big impact. We've also heard from Nigeria's oil minister, though, saying that Nigeria, like many other countries, is moving back onshore, mothballing some of those very expensive deep water exploration projects, and that's probably going to remove about 3 million barrels a day over the medium term. So the expectation is that oil prices will begin to rise by the end of the year. We've heard from the head of BP saying perhaps by mid-year they'll be back up around $40 a barrel. By the end of the year, around $50 a barrel. But of course, that's still way below the peak of around $114 a barrel back in June 2014.
Well, Jack, it actually seems to be a positive outlook for oil. But this year's meeting actually started off with a gloomy outlook, not just for oil, but for the global economy as a whole. Now, what have been some of the key highlights so far? And of course, has the mood changed as it pertains to China and the global markets at the meeting?
No, there really has been a gloomy atmosphere, but not an atmosphere of panic or the sort of acute concern that we saw at many of these forums since the start of the global economic crisis. That all seems to have passed, but the mood is certainly not optimistic. There is concern about the slowdown in China, the impact that's having, particularly in falling commodity prices, the impact that's having in the emerging markets. But there's also, ironically, concern about the growth in the United States, because we've seen the Fed now raising interest rates. So investments coming out of the emerging economies, heading back to the US, where they're going to get stronger returns. But here in Europe also, a lot of discussion today. The Eurozone was seen as the biggest risk before. Now it's the entire European Union, with really stagnant recovery here. On top of that, the refugee crisis, a spate of terror attacks, many other issues, including the potential exit of Britain entirely from the bloc, which is creating a lot of uncertainty. So what we're seeing is the expectation is that a sort of recovery will keep staggering along, but the International Monetary Fund have revised down their forecasts, and the fund's chief, Christine Lagarde, has called what we can expect in the year ahead the new mediocre.
Well, thank you so much, Jack, for those insights. Of course, he's joining us from Davos.